Hey Bobby Trades! I wanted to do a video analysis update of the stock market. We'll talk about big tech first, like the Nasdaq, Nvidia, Facebook, Apple, Amazon, Advanced Micro Devices, Qualcomm, and Intel, as well as Microsoft. We'll talk about clean energy like NIO, Tesla, FSLR for solar, XPEV, and Li Auto. Will move into software like ROKU, Palantir, Autodesk, SEC Limited, Cloudflare, Alibaba, Baidu, OKTA, Netflix, and Chewy. We'll also talk about Nano Dimension and Salesforce. I'll talk about Walmart, Nike, and Procter & Gamble. Then we'll move into industrials like the Dow Jones, Boeing, American Airlines, a travel stock like Disney, Carnival Cruise Lines, and Delta Airlines. We'll also talk about Occidental Petroleum and Marathon Patent Group. So a lot to get into. Let's get right into it. This is the Nasdaq QQQ. We've had a wave 1 and a wave 2. We've had another wave 1, an ABC correction at the 61.8 to 78.6% retracement. So high likelihood this is a wave 2 we've put in. And now we have reached that equal legs target, which was found by taking the length of wave 1, place at the wave 2 low. So remember, the equal legs target, that's the conservative target. And when we look at Nvidia right now, we're going to see why that's probably going to be conservative, because this chart is almost identical to what QQQ looks like. Before this massive rally. We had a wave 1, an ABC correction put in a wave 2 low. We had another wave 1, an ABC correction put in another wave 2 low at the 61.8% retracement. So we had the length of wave 1 placed at this wave 2 low for our conservative wave 3 target for Nvidia, and we've blown past that, right? We've blown past that. We've actually gone past the 161.8% extension. So, this is definitely a wave 3 in progress, and I actually believe it's still in progress. So even when Nvidia eventually corrects and has a wave 4 between the 23.6 and 38.2% retracement of wave 3, which we would never short, because in L8 wave theory, you never short wave 2 or wave 4. You only trade the impulse of waves. That doesn't mean the impulse waves can't go to the downside, but let's face it, we're in a bull market right now, and the impulse waves are to the upside, so you never short a wave 4 correction. You have cash ready to buy the dip in the 23.6 to 38.2% retracement to ride the 5th wave higher. Either way, I don't think Nvidia is a great opportunity, but I think it's an incredible template right now for what we should expect from the rest of the tech side of this market, that we're going to blow past this equal legs target. We're probably even going to go past the 161.8% extension. So how would that look like on QQQ? I've kind of drawn it up right here. If we look out and zoom on the bigger degree chart, I think what it would look like is we'll have a wave 1 and a wave 2. We'll blow past that equal legs target for wave 3. And then we're going to have a shallow wave 4 correction before going on a 5th wave higher. So I think it's going to look something like this. We have a wave 1 and wave 2. We're going to go all the way to the 161.8% extension of wave 1 for this wave 3 target. That's 364. That wouldn't be the top, but that would be a good place, especially when we look at Apple and we look at Amazon, if they're in their wave 3 target zones, where bulls in the short term would say, okay, this is a pretty good place to expect a shallow wave 4 correction before riding a 5th wave higher. So I don't think the Nasdaq itself is a great opportunity, but I do expect it will continue to trudge up to that 161.8% extension for wave 3 of 364. We'll have a shallow wave 4 correction. Then we'd be looking for a 5th wave higher. So assuming wave 3 topped at 364 and the wave 4 correction ended between the 23.6 and 38.2% retracement, we'd be looking for a wave 5 higher, that would take the Nasdaq pretty close to the 380s, as wild as that sounds. If we look at, the Nasdaq right now, we're not going to trade it alone, because I think Apple and Amazon, they're going to be really good templates. Let's look at Facebook first, because we had an interesting development out of Facebook today. We reached the equal legs target for Facebook. So you remember for Facebook, we had a wave 1 and a wave 2, and then we had another wave 1 and another wave 2. And the debate was, is this a wave 1 or a wave 2? Or is this a wave 3 and a wave 4, right? So do you remember how, we decided that this was most likely going to be another wave 1 and another wave 2? It was because Facebook had broken above this high on the relative strength index. So there's a pretty obscure rule in Elliott wave theory that essentially says a wave 5 has to end with momentum divergence. So what we saw was when Facebook made a new high, it did so and it made a new high on the relative strength index. So we thought it was very unlikely that Facebook was within a wave 5. The most likely possibility was that Facebook was nesting right here. This was another wave 1 and another wave 2. I believe Facebook has proven that today because it has gone all the way to this equal legs target right here. So I think Facebook has reached, the target, but I think it's also kind of done what Nvidia's done and said, hey, I'm still within a wave 3 right now. So I think Facebook's a good place for profit taking. That doesn't mean it won't continue higher. It most likely will continue higher, but I still think this is a good place for profit taking. We've reached the equal legs target. I think Facebook, might not be the best opportunity. I think it's very similar to Nvidia, where it's a wave 3 that's still in progress. It's a good template to show the market still has upside, but it may not be the best opportunity itself. If we talk about Apple and Amazon, however, I think that's a different story. So let's look at Apple and Amazon. I think these two are going to be really nice templates for navigating the market, because Apple is very close to breaking this exact same 429 high. It's very similar in the date even that, Nvidia and Microsoft made those exact same highs, very similar to the QQQ high that's already been broken. I believe Apple, it's almost written in the sand that we're going to see Apple break above this high, very soon. And that's going to confirm what we thought for a while, that this is a wave 1. It's a 1, 2, 3, 4, 5 subdivision for a wave 1, and it's the exact same dates as Amazon, which we're about to look at. We have an ABC correction. We put in a wave 2 low at the 61.8% retracement. So Apple, very soon is going to break above this high, confirm it's a wave 3 in progress. Then the minimum wave 3 target is the length of wave 1 placed at the wave 2 low. That's going to take Apple to 143. I think that's going to be too conservative. I think Apple's going to go all the way to the 161.8% extension target of 149. That wouldn't be the top. We'd have a shallow wave 4 correction. We'd be going on a 5th wave higher. At the very minimum, I believe we're going to see Apple at 160 by the end of this quarter. I think if we zoom out to the larger degree, and we've kind of talked about this with Microsoft, how the larger degree count is starting to firm up for Apple, where this is a wave 1, and ABC correction puts in a wave 2 low. The length of wave 1 placed at the wave 2 low is eventually going to take Apple all the way to 188. So, that's kind of what the bigger picture destination is for Apple. And the classical traders, what do we call this? A perfect bull flag with sideways consolidation. Then we break out of the bull flag, we back test the bull flag, and now we're getting ready to go. And that's just from a classical trading standpoint. That really lines up with the wave theory right here. But I think if we look at Apple, and we wake up one morning and Apple's at 149, and then on that same morning, the NASDAQ is at 364, that's going to be a time where we say, okay, Apple is at the 161.8% extension. QQQ's at the 161.8% extension. Bulls in the tech, side of the market should probably be looking for a shallow wave 4 correction before riding a 5th wave higher. So, Apple reaching 149, especially if it has confluence with QQQ reaching 364, that's going to be a pretty big deal. I think Amazon, Amazon's a really pretty chart. It's very interesting watching, the bears kind of ignore all these big tech stocks that are making new highs, right? They ignore Facebook making new highs. They ignore Google making new highs. They ignore Microsoft and Nvidia making new highs. And I think they're about to ignore Amazon making new highs, right? Bears, what is the count here? This is pretty clean. A 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2 at exactly the 61.8% retracement. So if you say, I don't believe in wave theory, well, this is the 61.8% retracement that Amazon just had a monster reaction from. And I think if we look at this subdivision right now, it's pretty clean. On the smaller degree, it looks like that's going to be a 1, a 2, a 3 that we just kind of put in. And this is on a small degree, right? So, I think the larger degree count we'll talk about in a second. But even just on the smaller degree, I think it's kind of, already programmed that Amazon's going to break above this high for kind of this 5th wave higher at the very minimum. But if we look at the larger degree, the more important count, the length of wave 1 placed at this wave 2 low is eventually going to take Amazon at least to 3,800. And I think that's another thing the bulls are going to want to look out for. Kind of similar to Apple, very similar to the NASDAQ. Amazon at 3,800, that's really the minimum target. And I think it's something the bulls can kind of safely wait for, even in the most conservative count. When we see, Amazon at 3,800, that even wouldn't be the top. That would be the conservative, wave 3 target. We'd have a shallow wave 4 correction, and even in the most conservative view, we'll see a wave 4 retest the wave 1 high before we go on a 5th wave higher. There's at least the length of wave 1, and I think ultimately, even in the most conservative, kind of idea, we're going to see Amazon go all the way to 4,230. When we look at Alibaba, we look at Walmart, we look at Procter & Gamble, I think the e-commerce and also kind of the big box retailers, they're going to look at Amazon pretty closely too. But even for big tech, I think we have the length of wave 1, place of this wave 2 low. And the market in general, we're going to be waiting for Amazon to reach 3,800, I think pretty reliably. So that's Amazon. I think, this is really something that we're starting to see, right? What we say, it's going to be just like last year, right? We're consolidating, we're boring traders to tiers. This is advanced micro devices, right? Oh, AMD is boring. Notice that's the last week of the quarter in 2020. Right around this time last year, advanced micro devices is so boring. The quarter changes, boom. We're starting to get this huge reaction right now. AMD, I believe, is a wave 1 and a wave 2, a monster wave 3 rally, very clean subdivision, 1, 2, 3, 4, 5. To complete this wave 3, now we have this, ABC correction. Just get everyone out of advanced micro devices before it explodes this summer. Just like last summer, we have this wave 4 low at the 38.2% retracement. I don't believe we're going to see AMD below 72.50, perhaps until hell freezes. I think AMD is going to go on a monster wave 5 higher. The conservative wave 5 target would be the length of wave 1, placed at the wave 4 low. I think that's going to be too conservative. I think 115 is going to end up being too conservative. I think advanced micro devices goes the length of wave 3, plays at the wave 4 low, and towards the end of the year, pretty conservatively, the first quarter of 2022, we see advanced micro devices all the way to 136. And I think that's going to really line up with what we're seeing on Qualcomm and Intel, where we're looking for a large rally in the semiconductor sector. We also talked about how Apple makes that M1 chip. It's starting to move with these semiconductor stocks too, slowly but surely. I think Qualcomm has this beautiful leading diagonal, 3 reactions on the top, 3 reactions on the bottom, then an ABC wave 2 kickout wave before a monster wave 3 rally, right? We call this the rookie wedge because a lot of people think this is bearish. No, this is bullish. This is a leading diagonal, and then you have that kind of Wyckoffean kickout wave before you have a monster wave 3 rally. We have an ABC correction. We put in a wave 4 low at the 38.2% retracement. Qualcomm with advanced micro devices, very similar. I'm expecting huge rallies, for this quarter and even into the next quarter. I don't believe Qualcomm will go below 122. I think it's almost identical to advanced micro devices, where the length of wave 1 placed at this wave 4 low is going to end up being too conservative. I don't think Qualcomm's going to stop at 169. I think it goes the length of wave 3 placed at the wave 4 low. And just like AMD, I think Qualcomm goes all the way to 232, as crazy as that sounds. That's going to happen pretty aggressively by the end of the year, pretty conservatively within the first quarter of 2022. So I love Qualcomm, the stepchild right now of the semiconductor sector. Unfortunately, this isn't getting much attention, but I really like this stock. It's kind of also a value name, whereas Intel, we have a 1, 2, 3, 4, 5, large degree wave 1, and ABC correction puts in a large degree wave 2 at this 61.8% retracement. I think this is going to hold, but really the invalidation level for a wave 2, unfortunately, is all the way down there at the 78.6% retracement. I think pretty tight. The stop is 53.42, but I believe this is a very clean 1, 2, 3, 4, 5, large degree wave 1, and ABC correction puts in a large degree wave 2 at the 61.8% retracement. I think Intel goes the length of wave 1, placed at this wave 2 low. It's going to go all the way to 78. I believe, and I think that's going to happen pretty conservatively in the second half of this year. So Intel looks really good. And that's really most of it for big tech. I want to talk about Microsoft real quick. Microsoft is kind of like QQQ, is acting as a really good template. I mean, this is just the gift that keeps on giving. Let's look at the larger degree count first for Microsoft, because we're almost getting to what I call the destination. So when I talk about the destination, what am I saying? I'm saying that the larger degree, the more important count in Elliott wave theory is the ultimate target, right? And then the smaller degree count is the path. So the smaller degree subdivision for this 1, 2, 3, 4, 5 waves impulse to complete this large degree wave 1, in my opinion, is very clean. I think Microsoft also is acting as a pretty good template for the S&P 500 and the NASDAQ, because it's large components of both. We think Microsoft is going pretty safely to 300, right? We shouldn't be calling for a major crash in the stock market. And I just analyze the market holistically. We'll talk about the Dow Jones towards the second half of this video, but if we have all these individual components that are looking really good, no reason to call the top. I think a lot of traders, they make this mistake. They just stare at SPY all day. Don't stare at SPY all day. Look at the components of SPY. You'll know everything you need to know, right? Nike just explodes to a new all-time high. Gap's 15% after 6 months of consolidation, right? And that just gets completely ignored. So anyway, this is a large wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in a large degree wave 2, and it's very similar to Apple. We have the length of wave 1 placed at this wave 2 low. Microsoft's going all the way to 296 for that conservative wave 3 target. And what's this also called? Classical traders, right? This is a bull flag, a bull flag, consolidation, the breakout and back test of the bull flag. And now we're running off to this very conservative bull flag target, as well as the wave 3 minimum target. We look at this subdivision, wave 1 and wave 2, we predict this rally. Wave 1 and wave 2, we predict this rally. And why were we predicting these rallies? Because they were both at the 61.8% retracement. So if you're like, I don't believe in wave theory, right? Classical traders, they're calling this weakness. Wave theory is calling this opportunity. The length of wave 1 placed at this wave 2 low. Very conservatively, I believe Microsoft is going to 277. It's not there yet. We still have 9 points. And that's the conservative wave 3 target. We'd have a shallow wave 4 correction. We go on a 5th wave higher. So even in my most conservative view of Microsoft, we're going to get to that larger degree wave 3 destination, because if we have wave 3 end at 277, which I actually don't believe will happen, I think it's going to go further than that. We'll talk about that in a second. But then we have a shallow wave 4 correction that retests this wave 1 high. We still be looking for a 5th wave higher, taking Microsoft all the way to 302. So if we look at the larger degree count, this really lines up with kind of what we talked about on the NASDAQ QQQ, where it's, wave 1. I'm going to make this in red. We have wave 1, and then we have wave 2, and then we have, this large wave 3 impulse. And I think that this wave 3 will ultimately go all the way to the 161.8% extension of wave 1, which is about 287. We'll have a shallow wave 4 correction between the 23.6 and 38.2% retracement. So, the 161.8% extension is going to be 287. We'll have a shallow wave 4 correction, and then we'd be looking for a 5th wave higher. I think Microsoft goes all the way to 302, no matter how you count it. So I think Microsoft looks really good. And I think it's also a really good template, kind of for the rest of the market. So that's kind of big tech. Let's talk about Tesla real quick. I thought this was interesting. We're starting to get this downtrend break. Just look, for those of you, I think this is probably one of the most important things traders can add to their repertoire. Look for stocks with extremely low implied volatility. The 1-year implied volatility low for Tesla and First Solar, right before the quarter ends, right before their huge breakouts, right before this news that we have about, I believe, China. I believe Joe Biden banned photovoltaic cells from a certain province in China. I'm not a fundamental analyst. Don't quote me on that. But this huge news comes, and it's right around the time, 1, when the quarter is ending, and 2, that Tesla and First Solar's implied volatility rank and percentile is at the very bottom of its 1-year range. When you have a liquid stock, in an options market like Tesla, even people who don't trade options, they have to pay attention to this, because what essentially happens is there's a trough in demand in the options market. So we're going to have a huge move. That does not guarantee the move is going to be to the upside, but what it does, quote unquote, guarantee, Tesla's going to have a large move. The implied volatility cannot stay extremely low on a liquid stock like Tesla forever. Some people are going to argue with that, but that's just how it works. So one thing I like to do every day, you can go to options right here. You guys know I love the long straddle and the long strangle index. One thing I also do, I go to IV rank and percentile. And this is kind of, this is where I look at charts all day, when the trading day ends. And what you can do, this is very useful on bar chart. You can go to IV rank and make it to where it's sorting by the lowest IV rank, and then you'll just have a whole list of stocks with 0% IV rank and percentile, and this is where I'd be looking for setups, right? And it's not because all of these stocks are going to have a large move to the upside, but all these stocks, they're going to have a big move, right? We talked about Riot Blockchain. We've talked about Autodesk. We're going to talk about Autodesk in this video. I really like Oxygen. We can talk about Oxygen in another video, but this is where I would be looking for setups, right? Because these stocks, they're actually going to move. But anyway, not to get sidetracked, let's talk about Tesla, because it's looking pretty good. We talk about, all these solar energy, all these clean energy stocks having these huge moves. And I think Tesla is a great example of that, where the quarter ends, the implied volatility rank and percentile hits 0, and then Tesla's off. So let's look at the larger degree count for Tesla. We have, this downtrend break right here. Every, wave theorists, unfortunately, they're calling this a 1, 2, 3, 4, 5. The classical traders, they kicked our ass on this, because really there were very few wave theorists that were looking for, this to be a wave 1 and wave 2. A lot of classical traders, they said, hey, this is the falling wedge. Tesla's about to have a huge break. The wave theorists, unfortunately, they call this 1, 2, 3, 4, 5 in ABC. So they were looking for the 5, 3, 5 flat down to 420. And I said, that's not happening. So we had a wave 1 and a wave 2. We're going all the way to the 161.8% extension at least for wave 3. That's 929. What a lot of wave theorists will do, they'll use these downtrend breaks, these clean downtrend breaks, as evidence that a corrective structure is ending. We'll talk about that when we zoom out to the larger chart. But, we have this downtrend break. We also have this downtrend break. And then I believe Tesla's wave 3 is going to go all the way to the 161.8% extension of 929. I think aggressively that's going to happen in July. I don't see any scenario where that doesn't happen, in August. To be completely honest, I think Tesla's going to have this monster breakout, reach 929, have a shallow wave 4 correction, and then go on a fifth wave higher. And, when we zoom out to the larger degree chart, right, it sounds crazy that Tesla's going to go to 1370. And that comes from this being wave 1 and wave 2. We have this monster wave 3 impulse and ABC correction puts in a wave 4 low. The length of wave 1 placed at this wave 4 low, I believe will take Tesla all the way to 1370 because I don't believe, wave 5 is going to be the length of wave 1. I believe wave 5 is going to be the length of wave 3. If wave 5 were the length of wave 1, Tesla wouldn't make a new high. So I don't believe that's going to be the case. But, a lot of people think, that's crazy. Tesla's going to go to 1370. It might be right in front of us, right? Because this is going to be wave 3 to 929. That's a textbook wave 3 target. We'll have a shallow wave 4 correction. And then what? Wave 5 is either going to be the length of wave 1 or the length of wave 3. If it's the length of wave 3, place at the wave 4 low, we're basically already seeing Tesla on a path to 1200, right in front of our eyes. It's not too crazy. And a lot of times, for a monster breakout like this, a wave 3 like Nvidia is going to blow past that 161.8% extension. So anyway, I have Tesla going to 929. I'm looking for a shallow wave 4 correction before a fifth wave higher. We'll talk a lot about the rest of the clean energy sector. I just wanted to show this. I found this little gem. It looks really pretty. So this is a ratio chart or also a relative strength chart. It's basically just measuring Tesla's performance in comparison to the S&P 500. What it's essentially saying is since late January, Tesla has underperformed the S&P 500, and now we've had this breakout on Tesla as a ratio to SPY, where what this chart is essentially saying is that when we wake up on green days for the market, we should expect that Tesla is going to be outperforming SPY. So Tesla's going to be up more of a percentage than SPY is up, and on red days, we should expect that Tesla is holding up better than SPY essentially. But this is what the classical traders, they're going to call this a double setup. What a double setup is that's when a stock breaks out in absolute terms, which is in terms of price in US dollars, but it also breaks out in relative strength terms, which is how well it's performing as a comparison to the S&P 500. So a lot of evidence from Tesla that clean energy is going to outperform this quarter. And that's going to bring us to some of these other stocks, right? Some of these other stocks, they didn't wait. They didn't wait for the quarter to end, and this was a lot of evidence. We saw these Chinese electric vehicle stocks just exploding. NIO 1, 2, 3, 4, 5, large degree wave 1, ABC correction, large degree wave 2. We're having this large reaction from the 50% to 61.8% retracement. I believe this is the wave 2 that's in. And when we talk about Roku in a second, Roku and NIO, Roku is really close to doing this, but breaking above this high, for Roku and NIO, we've already seen a lot of software stocks break out to new all-time highs like Cloudflare and SC Limited, but this is going to be, huge for any growth investor. If we see Roku and we see NIO above these highs, I think it's coming quicker than we think. But anyway, I'm still looking for, this to be a wave 1 and a wave 2, and I'm still looking for NIO to go all the way to 96 aggressively by the end of this year, conservatively, conservatively by the first quarter of 2022, I think we see NIO replicate this entire rally and go all the way to a conservative wave 3 target of 96. I'm pretty sure options on NIO from when I talked about it are up 100%. I took some pictures, but anyway, NIO 1, 2, 3, 4, 5, large degree wave 1, ABC correction, large degree wave 2 at the 50% retracement. I think this is the wave 2 that's in. We're going to go the length of wave 1, place at the wave 2 low. By the end of the year, aggressively, conservatively in the first quarter of 2022, I think we see NIO in the mid 90s, and that's going to be huge for a lot of clean energy investors. And we never look at clean energy by itself. We look at XPEV, we look at Li Auto. These are looking very pretty right here. So XPEV really helping confirm this breakout. Wave 1, ABC correction, wave 2, the length of wave 1, place of the wave 2 low is going to take XPEV all the way to 80, for the bigger picture. I think that's going to be very good for, clean energy investors in general. What we've also talked about is you can turn on the Ichimoku cloud for XPEV. and for Li Auto, and you can see that these monster breakouts, that we're continuing to hold and actually build on these Ichimoku Cloud breakouts. I just love the Ichimoku Cloud because it's so objective, right? Some people don't believe in wave theory, but this is all just math, that we're having a monster trend change right now where we're having this huge cloud breakout. I think it's really helping confirm that XPEV has put in this wave 2 low at 22, and we're going to go all the way to a conservative wave 3 target of 80, and that's very conservative. Even then, we'd have a shallow wave 4 and go on a 5th wave higher. I think XPEV has, kind of this cup and handle look written all over it, but that's XPEV. Li Auto is a very similar story. So if we look at Li Auto right now, it's almost identical. I think what's pretty interesting about Li Auto, people ask why I draw these equal lines. Here's why I draw these equal lines. The length of wave 1 placed at this wave 2 low. And look, Li Auto is just perfectly riding, this line, right? That's no accident. The length of wave 1 placed at the wave 2 low. And you can even see on the chart, the algorithms are really respecting that 1-to-1 ratio, that equal legs target. Li Auto, 1, 2, 3, 4, 5, large degree wave 1, ABC correction, large degree wave 2, the length of wave 1, place of the wave 2 low, takes Li Auto ultimately, all the way to 49. I think it's just like XPEV, it's got cup and handle written all over it. And this is another one. You turn on the Ichimoku Cloud, you're seeing, these breakouts. They're continuing to be built on. They're continuing to be built on for Li Auto. So, I really like that. I think there's a monster trend change that we're seeing, and we really gamed it pretty well, just to be completely honest. So, that looks really good. I want to talk about First Solar real quick. Let me look at NEO real quick. We go on the 1-year chart. I just think this is pretty interesting. We talk about these Ichimoku Cloud breakouts. NEO's Ichimoku Cloud breakout is also on the 1-year chart. It's really starting to firm up. We're continuing to build on this Ichimoku Cloud breakout, and this can be really useful for traders who are, in a trade like this, and they're just like, okay, when do I sell? When do I hold? Is this guy on, YouTube talking about wave theory crazy? The Ichimoku Cloud can help you kind of stay in this trade where you can just say, okay, as long as NEO is continuing to build and break above this Ichimoku Cloud, I'm going to stay in it. That's just, one idea that I usually like to employ if I'm in a trade that's going well. The Ichimoku Cloud will help you, stay in it from a mathematical basis a lot of times longer than you're willing to. So that's NEO. Here's First Solar. We're starting to see a huge breakout for First Solar. I love this right here. We have a wave 1 and a wave 2, another wave 1, and ABC correction puts in another wave 2 low. We never broke above this low. First Solar became risk-free when I talked about it in this, very low range. The options went up 100%. So it became risk-free because you can always sell half and remove the original risk of the trade. So I always buy options in even lots. We continue to get kind of worn out and theta decayed. And this is one where, even though I kind of nailed the low for, the price, it would have been almost better for me to wait for the implied volatility rank and percentile to hit 0, because that happened on June 11th. And then what happens? We get all this news about First Solar. They're building a new factory in Ohio, and Joe Biden bans photovoltaic cells from this certain province in China. So I thought that was pretty interesting. The options market will always be aware of news events before you are. I can assure you of that. So we have a wave 1 and a wave 2. We have another wave 1 and another wave 2. I don't believe First Solar is going to go, below this low of about 67. We're going to go the length of wave 1, place of the wave 2 low. And I think, 3-4 months from now, we see First Solar all the way to 120. That's going to be the conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher. And that's one where I zoom out to the larger degree count. And you can almost see how this is a large wave 1 and a wave 2, another wave 1 and another wave 2. Then we kind of have yet another, wave 1 and another wave 2, but we can see right now the writing is on the wall that takes First Solar all the way into this, 50% to 61.8%, retracement that I have for this larger degree wave 3 target. We can almost see, if we zoom in on the smaller degree picture, how exactly First Solar is going to get there. Where if we look at the 3-year chart, we have a wave 1 and a wave 2, and then wave 3 and wave 4. We could see this 5th wave higher, right in front of us, take First Solar into that larger degree wave 3 box of about 160. So First Solar looks really good. I love a lot of the clean energy stocks. Let's talk about some software stocks, because ROKU is a really important chart for really any growth investor, and here's why. The bigger degree picture, we just slaughtered this, right? How did I slaughter this? It's because we went to the price overview. We said, hey, ROKU's implied volatility low was hit on June 11th. That's basically when I post about it. A liquid stock with a liquid options market like ROKU, that implied volatility low can't stay, 0% forever. The options market is telling you we're going to have a big breakout, especially when it's, right around the time that a quarter is ending and a new one is beginning. So we have a wave 1 and ABC correction puts in a wave 2 low. We have this monster wave 3 rally. So this is the conservative count, actually. For those who think this is crazy, this is a conservative count. This is a wave 3. We have an ABC correction and we wick at exactly the 50% retracement. And then I believe this is a wave 4 low we've put in, and Roku will go the length of wave 3, place at the wave 4 low. And that wave 5 target is going to take Roku all the way to 707. That's going to happen, in my opinion, aggressively by the end of the year. Like a lot of these other stocks we talked about, conservatively, in the first quarter of 2022. I'm expecting a lot of these, big rallies from 2020 to be replicated in time and price. But this is going to be a big deal for basically any growth investor. If you see Roku above 486, that could happen very quickly. That's only a couple percent higher for Roku, that we could see this above 486, and then there would be a plethora of growth stocks that made this exact same high, in mid-February, that we say, okay, it's in the books. Roku's already showed us we're going to break above these highs. And this low is in. We're going to talk about some of those stocks in this video. But Roku, if you're a growth investor, it's cause for celebration if you see Roku above 486, because a lot of other growth stocks in the software sector especially, they're going to play follow the leader. And this is acting as a leading indicator right now. We have a wave 1 and ABC correction puts in a wave 2 low. Monster wave 3 rally and ABC correction puts in a wave 4 low. I believe that wave 5 will be not the length of wave 1 placed at the wave 4 low. I believe wave 5 will be the length of wave 3 placed at the wave 4 low. It sounded crazy. It's not sounding so crazy anymore that Roku's going to go all the way to 707 aggressively by the end of the year, conservatively in the first quarter of 2022. So Roku, even for those who aren't in it, they need to pay attention, because that's very bullish for a lot of software stocks. One stock I think we're starting to see this firm up is Palantir. I think Palantir, we're starting to see this breakout is building. It's going to start playing follow the leader in the software stocks. It's going to follow Cloudflare. It's going to follow Roku. It's going to follow SEC Limited, and this whole sector looks ready to go. Palantir, wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. ABC correction, large degree wave 2, between the 61.8 and the 78.6% retracement. I believe Palantir is going to go the length of wave 1, place at the wave 2 low. I'm looking for it to reach 53 in the second half of the year. Okay, that's kind of been my target for the entire time. It's starting to firm up, and I think Palantir is moving slowly now. We're about to see it pick up the pace, go the length of wave 1, place of the wave 2 low. It's going to go all the way to 53. I don't believe it's going to break below 17, honestly, ever. We're going to see it go all the way to the median of this pitchfork. Another thing I like about Palantir, I always love this Andrews pitchfork when you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, when you have a gorgeous reaction on the median. I love to see these daily candles wick and have the wicks tag the median of the pitchfork. So I really like Palantir. I think as well as going the length of wave 1, place of the wave 2 low, it's going to go all the way to the median of this pitchfork. So Palantir looks really good, expecting it to be in the 50s in the second half of the year. Autodesk I really like. We should probably look at SEC Limited, as well as Cloudflare before we look at Autodesk. But this chart looks really pretty. A large wave 1 that's very cleanly subdivided into 1, 2, 3, 4, 5 waves. And then we have an A, B, C correction. We put in a large wave 2 low. I mean, this is also a textbook bull flag, right? I always love when the wave theorists and the classical traders agree. This is a textbook bull flag, kind of a symmetrical triangle pattern, belongs in a textbook right here. But 1, 2, 3, 4, 5, large degree wave 1. A, B, C correction, large degree wave 2, and look where we reverse right here, the 61.8% retracement, right? You have to know that's the 61.8% retracement. That's where we get this monster reversal. And then we have another wave 1, and ABC correction puts in another wave 2. So I've got the stop right now at 265. I don't think that's going to be broken. The invalidation level is all the way down here at 252. I don't think either of those get broken, and I believe Autodesk, will replicate this kind of 3.5, 4 month rally, go the length of wave 1, place of the wave 2 low. Very conservatively reach 359. I'm looking for that to happen by the end of October. So Autodesk looks really good. Anyone who's interested in the software sector is going to want to keep an eye on that one. So here's SEC Limited. Not a great setup. I haven't talked about this stock much, but we have broken above the exact same, we talked about this 215 high, right? Roku forms this exact same 215 high. It looks like it's about to break it. Okay, so this is called, kind of analyzing the market as a whole. This is a major software stock. It forms the exact same high on February 15th. and the exact same high, in late April that a lot of software stocks do, right? I think Roku bulls, you've kind of seen the answer. You know that we're about to break above this 215 high, right? And a lot of software stocks, when we look at OKTA, these are the exact same dates, 215 high and, mid to late April high. SEC Limited has broken above both of these. So I just want to map out kind of how the rest of this count should look. We have a wave 1 and a wave 2. Wave 3, in my opinion, will go all the way to at least 332. We'll have a shallow wave 4 correction. We'll be looking for a 5th wave higher. Even in the most conservative view, I think we're going to see SEC Limited all the way to 365. Probably not the best setup right here. I don't like to buy the new highs. I like to kind of use the wave theory prowess to buy the dips. But I think this is a really important leading indicator because it makes the exact same highs as many software stocks. 215, right? This is the exact same date Roku makes a high. And if you're a Roku bull, you've kind of seen the answer. Roku is going to break above 486. So if we look at OKTA, it's almost the exact same dates. Very similar dates for OKTA right here. Where, if we zoom out, I know it looks kind of messy, but this is the larger degree count. We have a wave 1, an ABC correction puts in a wave 2 low. We have another 1, 2, 3, 4, 5, larger degree wave 1. An ABC correction puts in another large degree wave 2 low. So this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low. We've kind of known for a while the destination is 322 for that minimum wave 3 target. Now we see the path how we're going to get there. That looks like it's going to be very conservative because we have, within this wave 1 and wave 2, a kind of leading diagonal is formed that is subdivided into 1, 2, 3, 4, 5 waves. That's another wave 1. We have an ABC correction. We put in another wave 2 low. We talk about OKTA right here. We have a wave 1, get off the bus, wave 2, and now the length of wave 1 placed at the wave 2 low. We've got OKTA. I've been looking for OKTA to go to 308 by early September. I think that's going to happen, and that also would line up with a kind of 2 equal legs targets. The first is the length of wave 1 placed at the wave 2 low, taking OKTA to 308. The second is the length of wave 1 placed at this wave 2 low on the larger degree, taking OKTA to 322. I think we wake up in September, and both of those ended up being very conservative. So that's OKTA. I want to talk about Alibaba and Baidu real quick. We're starting to get, right, what happens? The quarter ends, and then boom, all these new leaders are emerging. The institutions, they were accumulating Alibaba and I believe Baidu during this entire, quarterly dip. On the larger degree, this is a wave 1 and a wave 2, and then we have a 1, 2, 3, 4, 5, another large degree wave 1, an ABC correction puts in another large degree wave 2 at the 61.8% retracement. I believe Alibaba will go the length of this wave 1 placed at this wave 2 low, very conservatively reach 378, have a shallow wave 4 correction, and then go on a 5th wave higher. So if we actually, went all the way to this minimum wave 3 target, and then we had a shallow wave 4 correction that retested the wave 1 high, in the longer term cycles, I'd be looking for a wave 5 to go all the way to about 493. So I think in the bigger picture, we see Alibaba in the 500 range, and that's why I was always talking about Alibaba as kind of a better longer term play, because when we get to this minimum wave 3 target, we have a shallow wave 4 correction, we go on a 5th wave higher. We talked about how Wayfair, makes these exact same dates, and it goes on the 7-month rally. I think this is another one where, we get this huge replication of this rally, and by the end of the year, aggressively and conservatively in the first quarter of 2022, we see Alibaba all the way at 355 to 378. But I'm more interested in it as kind of a longer term play because as I just said, when we get to 378, that's the conservative wave 3 target. We have a shallow wave 4 correction. I'm looking for a 5th wave higher that ultimately takes Alibaba all the way into the 500 range. So that's Alibaba. Baidu, another Chinese kind of e-commerce stock. This is also an electric vehicle stock apparently. But anyway, large wave 1, an ABC correction puts in a wave 2 low. As crazy as it sounds, I always talked about this as a pretty high risk setup, but the length of wave 1 placed at this wave 2 low was eventually going to take Baidu all the way to 445. I think that's one where, if you're looking for a stock to go from the 180s to the 40s, 450s, you have to have a long-term, investment horizon for that. So I think that's the one where I'm looking for conservatively, in the first or second quarter of 2022 that we have seen this entire wave 1 placed at this wave 2 low be replicated. And then, for Baidu, also what we're going to note is the low of 174. That can probably be moved up to the stock right now. I don't think we go below 174. And then the length of wave 1 places the wave 2 low. We could see a monster wave 3 rally from Baidu that takes it all the way to 445. So that's just one, I think Alibaba bulls are going to be, very interested in that. Here's Netflix. We're starting to see some action from Netflix, right? Right around the start of a new quarter, these new leaders are emerging. And they're in the software sector. We have a wave 1 and a wave 2, monster wave 3 rally, and ABC correction puts in a wave 4 low. I don't believe that Netflix's wave 5 target should be the length of wave 1. Place that this would be the wave 4 low. But some are going to call this the wave 4 low for a triangle in Elliott wave theory. But anyway, I don't believe the target for Netflix should be 623. I actually think it's going to be much further than that. We're going to go the length of wave 3, place of the wave 4 low. We're going to see Netflix all the way in that 743 range. I think aggressively that's going to happen in the second half of the year. And I really think, we see Netflix in the 740s in the second half of this year. Pretty conservatively, I think by the end of this quarter, we see Netflix at that 623 target. But I believe it's a wave 1 and a wave 2, monster wave 3 rally. Then we have this wave 4, and I believe this is wave 1 of wave 5, wave 2 of wave 5, and then wave 3, 4, and 5 of a wave 5 is what's going to take Netflix all the way into that, 740 range. So just wanted to update Netflix because we're getting this, kind of movement with advanced micro devices, with Qualcomm, with all these, software and tech stocks. We're starting to see movement from this sector. Wanted to touch on Chewy real quick. Chewy's looking good. It's in my opinion, this is a wave 1 and a wave 2. We have another wave 1, and ABC correction puts in another wave 2 low. So the length of wave 1 places this wave 2 low. This wave 2 low is put in at the 78.6% retracement. Very good spot to see a wave 2 in. I believe the length of wave 1 places this wave 2 low. It's going to take Chewy in the second half of the year. I think by around Christmas, we see Chewy at 132, very conservatively in the first quarter of 2022. But I actually think that, this rally, it's from 914 to about 215, about 5 months. And I think really, 4 or 5 months from now, by Christmas, we see Chewy has gone all the way to 132. So Chewy looks good. I like how it's kind of respecting the length of wave 1, placing the wave 2 low, and kind of riding this line higher. So that's Chewy. Here's Nano Dimension. We'll talk about Nano Dimension real quick. We're starting to see this chart firm up. So on the larger degree, it's a wave 1 and a wave 2. And then we have a 1, 2, 3, 4, 5, another wave 1, and then we have an ABC correction. We put in a wave 2 low between the 61.8 and the 78.6% retracement. So I believe this is a nest right here, a 1, 2, and then another 1, 2. The length of wave 1 placed at this wave 2 low. We've had Nano Dimension. We're looking for a run to 21, right? It sounded crazy when it was at 6. Now that we're at 9, it's not so crazy anymore. But this reminds me a lot of Palantir, where, the chart's moving slowly, and then we're going to start to see it pick up the pace. It's another one where the second half of the year, by the end of the year, aggressively, conservatively in the first quarter. But I really think by the end of the year, we're going to see that Nano Dimension has replicated this entire rally, the length of wave 1, place of the wave 2 low. And it's going to start, to really pick up the speed for this wave 3 of wave 3. And I think ultimately, as wild as it sounds, the length of wave 1, place of the wave 2 low, is going to take Nano Dimension to 21. I actually think 21 is going to end up being conservative. So love Nano Dimension. That chart's firming up. Salesforce might be one of the few opportunities left in kind of the software sector. This is the classical traders. They're going to call this a bull flag or a falling wedge, and they're probably going to beat the wave theories here. But I think from a wave theory standpoint, it's a wave 1 and a wave 2, another wave 1, and ABC correction puts in another wave 2 low. Right at that 50% retracement. So I believe the length of wave 1 placed at this wave 2 low is going to take Salesforce all the way to 356. So this is another one where this rally, is from 330 to 830, exactly 5 months. By the end of the year, we should see Salesforce has gone all the way to 356. That's a conservative wave 3 target. We'll have a shallow wave 4 correction. I'm looking for a 5th wave higher. We're starting to see the Zoom chart firm up. I think Zoom and Salesforce, they're kind of going to be, the twin sisters in the market right now. We've seen a lot of evidence that Zoom has put in this wave 2 low at the 61.8% retracement, and it's on its way higher. I believe ultimately Zoom and Salesforce, they're going to move together, kind of break out of these exact same kind of falling wedge and bull flag patterns, and then Zoom and Salesforce. Zoom, in my opinion, is on the way to 800. So, that's looking pretty good. Zoom 1, 2, 3, 4, 5, large degree wave 1, and ABC correction puts in a large degree wave 2. I wouldn't chase Zoom here, but I do think it's a really good template right now for Salesforce. or Salesforce and Zoom, they're going to break out of these kind of consolidation patterns that they form together. And then Salesforce might be one of the opportunities left in the kind of software stay-at-home side of the market, where we see 201 not get broken, confirm that's a wave too low. The conservative wave 3 target is the length of wave 1, place of the wave too low. I think we could see Salesforce at 356 by the end of the year. I think, pretty conservatively, first quarter of 2022, we see Zoom's reach 800, and I think that Salesforce is well past 356 by that point. So that's Zoom, that's Salesforce. Here are some value stocks, some consumer stocks. Nike, we've had a monster breakout. When we talk about trading the market as a whole, right, this is one where if you're a bear and you've got all these crash scenarios in mind, you have to put a stock like Nike consolidating for 6 months and exploding to a new all-time high. That has to fit into your analysis somewhere. Okay, so this is a wave 1 and a wave 2, large wave 3 impulse. We predict this entire move. We have an ABC correction. We put in a wave 4 low at the 38.2% retracement. We said that's the wave 4 low. Nike will not go below 125. It tried to scare us a little bit, but ultimately it was a wear you out wave 4, and then boom, what happens, right? Notice, look, this isn't an accident. This high is made the last week of the fourth quarter, and then we consolidate sideways for exactly 6 months. And then when is the breakout, right? The breakout is exactly 6 months later, the first week of a new quarter, right? So that's not an accident. The breakout is the first week of the new quarter. And I believe the length of wave 1 placed at this wave 4 low. We're going to see Nike go all the way to 169. My time target of September 2nd ultimately is going to be reached. And I think this wave 5 is going to take Nike all the way to 169. So Nike looks really good. It's another one where if you're, a super bear, you're calling for the market to crash, and you call yourself an Elliott wave theorist, you have to kind of fudge this count now and kind of convince yourself that this is where wave 5 ends. I don't think this is where wave 5 ends. I think Nike goes the length of wave 1, placed at the wave 4 low, goes all the way to 169. I think Nike just blew up a lot of, bearish, macro scenarios right here, and it was largely ignored, right? So that's Nike. Here is Walmart. I think Walmart and Procter & Gamble are looking like really good opportunities. They're starting to move now, especially when we see some of these consumer stocks like Nike and Amazon, start to have these big breakouts. I think the big box retailers are going to be next. And also in kind of the value sector, we have a large wave 1 for Walmart subdivided into 1, 2, 3, 4, 5 waves. Then we have an ABC correction to put in a wave 2 low. The length of wave 1 placed at this wave 2 low. I believe, 6 months from now, we're going to see Walmart has gone all the way to 178 for that conservative wave 3 target. It's going to go from the lower bound of the pitchfork to the median of the pitchfork. Notice how this wave 2 was put in at the 50% retracement. So right here, I think 132 to 129 are pretty good stop levels. And then the true invalidation level is going to be this wave 2 low of 126, very similar to Procter & Gamble, where I'm looking for a major wave 2 to have been put in. I think Procter & Gamble and Walmart, they're pretty good diversification plays. They're another example of, one stocks, they're going to have these big breakouts for the new quarter. But also, stocks, they've lured people to sleep. And we had a large wave 1 for Procter & Gamble, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in a wave 2 low. And I believe 122 will not be broken. Just like Walmart, the probably better stop level is 125 to 128, with 122 acting as the invalidation. I think it's almost identical to Walmart, where we're going to go from the lower bound of the pitchfork to the median of the pitchfork. We're going to go the length of wave 1, place at the wave 2 low. We're going to see Procter & Gamble reach 174 in the second half of the year. I think 6 months, 7 months from now is where we're going to see those wave 3 targets for Walmart and for Procter & Gamble reach. So that's Procter & Gamble. Here's there's Walmart. Here's the Dow Jones. Let's talk about some of these industrial stocks. I think we're getting ready for a large move in this sector. If we look on the larger degree count for the Dow Jones ETF DIA, I'm expecting a lot more upside in the industrials. We have a large wave 1 cleanly subdivided into 1, 2, 3, 4, 5 waves. Then an ABC correction puts in a wave 2 low. So the length of wave 1 placed at the wave 2 low takes DIA all the way to 372. That's the larger degree kind of conservative destination. And then on the smaller degree count, this is just beautiful. We have a wave 1 and a wave 2, a wave 3 impulse past the 161.8% extension. We have an ABC correction. We put in a wave 4 low between the 38.2 and the 23.6% extension. I don't believe the Dow Jones will break below 332, but the invalidation level for a wave 4 is the 50% retracement of 324. The Dow Jones ETF is going to go the length of wave 1, placed at this wave 4 low. go all the way on a fifth wave higher to 383. And I think that's going to happen by the end of the quarter because this is a 2.5 month rally. So what are we seeing? We're seeing a situation right now where 2.5, 3 months from now, the end of the third quarter, that September quad witching, the Dow Jones and Disney and Delta Airlines are completing a fifth wave higher. So this fifth wave higher, it's going to be really good for the travel and leisure stocks, but it's also going to be one where if we wake up, August 30th and the Dow Jones ETF has completed this wave 5 at 383, that's going to be one where we're, really looking for, that cycle to be corrected, in that September quad witching, fourth quarter period. So that's the Dow Jones. Here's Boeing. I really think, Boeing and American Airlines, they're getting ready to go. We have, a wave 1, an ABC correction puts in a wave 2 low, another wave 1 and another wave 2, another wave 1 and another wave 2, and then this is probably another wave 1 and another wave 2. So it's just a monster nest right now for Boeing. I think, the best template right now is the length of this wave 1, place of this wave 2 low. Conservatively, is going to take Boeing all the way to 296. The 161.8% extension target is 307. I think that's going to be reached, and that really lines up with, on the smaller degree count, this wave 1, place of the wave 2 low. Takes Boeing all the way to 305, which is basically 307. So I think Boeing right now, I don't think it's going to go below this wave 2 low of 219. It's going to go all the way to the 161.8% extension target of 307. And I think it's actually going to blow past that, where that's going to end up being the conservative wave 3 target. We have a shallow wave 4 correction, and then a wave 5 is ultimately going to take Boeing all the way to the median of this pitchfork. So in the bigger picture, I'm looking for Boeing to reach 400. We need to get to 300, 307 first, but I think Boeing looks really good, and I think it's going to do really well with the industrials. I'm looking for a melt up in the airlines really to take place in July, but that doesn't mean I'm buying, call options that expire in July. So, that's just kind of understanding how the options market works. If you're holding an option that expires, within 30 to 45 days of expiration, the option seller is at a huge advantage. So this is American Airlines. We have a wave 1 and ABC correction puts in a wave 2 low. It's another one where we've broken above this wave 1 high. I believe we're going to the 161.8% extension of wave 1, which is 31. We'll have a shallow wave 4 correction. We'll go on a fifth wave higher. So I'm looking for a huge melt up right now across the airlines. I think, American Airlines, we want to see 19 hold. I think really for all of these, kind of travel and leisure stocks, the best way to play it is I think Boeing not breaking below 219 is going to be a pretty big deal. And I also think the Dow Jones ETF DIA not breaking below this low of 331 or this 50% retracement, as long as that happens, then we're going to look for a lot of upside in these industrial, these travel and leisure names. American Airlines is getting pretty close to this low of 19. I don't think it gets broken, but I think this is an entire kind of sector rally that I'm expecting right now. American Airlines, I think the length of wave 1 placed at this wave 2 low, the 161.8% extension of 31 lines up with this kind of bull flag that we're seeing right now. It's important to note Occidental Petroleum, Carnival Cruise Lines, they've already broken above this high, and this is another one where I'm expecting this melt up to 31. I think it's going to happen in July. But that doesn't mean I'm buying a call option that expires in July. But I am expecting a melt up in the airlines, very quickly in this market. And that also really coincides with, what we're seeing. If we look at the, cruise lines, the cruise lines are getting ready for a monster move right now. All these cruise lines are at 0% IV rank and IV percentile. This is basically the exact same high, in mid-March that, American Airlines forms, and Carnival Cruise Lines has already broken above it. I think Carnival Cruise Lines is going to go, to a wave 3, 161.8% extension target of 36, have a shallow wave 4 correction. Then we'd be looking for a fifth wave higher. That also kind of lines up with what I'm looking for Royal Caribbean. But before we do that, I think Carnival Cruise Lines is one where, a lot of the travel and leisure bulls, we kind of want to see this low of 23 really hold. So if we stay above 23, we kind of have this like bull flag on this weekly chart that I expect to play out, which would take us to the 161.8% extension of 36. If we look at Royal Caribbean and Norwegian Cruise Lines, it's a very similar idea where all these stocks are forming, small bull flags on the weekly chart, and we're looking for, the wave 3 to take us to the 161.8% extension target, which is about 110. So that's Royal Caribbean. And if we look at Occidental Petroleum right now, this is another one where I think the industrial bulls are really going to be looking for, a lot of confirmation. We have a wave 1 and a wave 2, another wave 1, an ABC correction puts in another wave 2 at the 61.8% retracement. I think Oxy is going to go all the way the length of wave 1, places this wave 2 low. It, kind of like Carnival Cruise Lines, it's already broken above that exact same high that a lot of the airlines, a lot of the travel stocks form in mid to late March. I think Oxy is going to go the length of wave 1, place it the way too low, and very conservatively reach 37. So I don't think the industrials are done, not by a long shot. And if we look at Delta Airlines, this is another pretty clean count in the industrial sector where I'm looking for a wave 1 and a wave 2. We have this wave 3 impulse at the 161.8% extension. We're having a shallow wave 4 correction right now, getting close to that 38.2% retracement. This is another one kind of for all the airlines. We want to see Delta Airlines hold this wave 1 high as well as the 50% retracement, which is basically the same number, 37 to 38, and we have this wave 4 ending right now at the 38.2% retracement. I believe Delta Airlines will go the length of wave 1, place at this wave 4 low. And I really don't see a scenario where, at least by the end of the quarter, we haven't seen this huge melt up across the airlines. But I'm really looking for that to happen in July. If we look at, Carnival Cruise Lines, American Airlines, and Boeing, they're showing that, in a couple of weeks, they have this monster rally higher. Of course, that doesn't mean I'm going to buy an option that expires in a couple of weeks, but Delta Airlines, the length of wave 1, place at this wave 4 low, in my opinion, ultimately is going to take it all the way to at least 62. That really kind of lines up with what we're seeing in Disney right now. If we look at Disney, we have a very clean count right here. It reminds me a lot of Nike, where it's a wave 1 and a wave 2, a large wave 3 impulse, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in a wave 4 low at the 38.2% retracement. Disney's going to go to the length of wave 1, place at the wave 4 low. I think very conservatively by the end of the quarter, it's going to reach 216. And the invalidation for a wave 4 low is the 50% retracement, which is 155. So this is another one all the travel and leisure bulls are going to want to look out for. But I think Disney's a great example of a 1, 2, 3 ABC correction wave 4, the length of wave 1, placed at the wave 4 low. It's almost identical to the Dow Jones ETF, where we're looking for a 2.5 to 3 month rally to be replicated in time and price that takes Disney all the way to 216. Last one, let's talk about Marathon Patent Group real quick, just to kind of get the crypto in here. I really like this setup. I think it's looking really good. We have a 1, 2, 3, 4, 5 large degree wave 1, an ABC correction puts in a large degree wave 2. I don't think Marathon Patent Group is ever going to go below 18. I believe it's going to go the length of wave 1, placed at the wave 2 low in the second half of 2021. I think we're going to see this wave 3 target of 75 be reached. Marathon Patent Group is really right now kind of a red herring for the crypto side of the market. This is a very clean setup, and if you're just staring at Bitcoin, you're going to miss this. But the crypto miners, they're looking really good right now, and I think Marathon Patent Group is just a great example of that, where this is a 1, 2, 3, 4, 5 large degree wave 1. We have an ABC correction. We put in a large degree wave 2 at the 61.8% retracement. I don't believe Marathon Patent Group goes below 18. I think it's within a wave 3 right now, and we're going to see in the second half of the year, by the end of the year aggressively. It's another one where conservatively in the first quarter of 2022, we've seen Marathon Patent Group go all the way to 75.